subcommittee as well, Comrade Dr. David Masondo, who is also the Deputy Minister of Finance. As you would have known, that we would have, as part of the discussions, of course, that are ongoing within the NEC. The NEC, of course, is taking stock on the MTBPS which would have been delivered by the National Treasury on Wednesday. The ANC would have then issued a statement, and today's briefing will be a further unpacking of the ANC statement on the MTBPS as well as the economy broadly. I'm going to ask Comrade Zuko to come up first to give us the ANC's outlook on the economy broadly and our reaction, of course, to the MTBPS. And then after that, we will hand over to Dr. Masondo, Comrade Masondo, rather, who will then, after that, further unpack the MTBPS. Thank you so much. Over to you, Zuko.
Thank you very much, Comrade Spokesperson. Good afternoon to members of the Fourth Estate and the viewers at home. As already explained, the National Executive Committee is in session, and we are currently discussing the state of the economy in light of the MTBPS that was delivered by the Minister of Finance on Wednesday, but also the economic data that has been coming through for the quarter. One of the things that the National Executive Committee is, of course, concerned about is the performance of our economy in terms of job creation. Yes, we've noted the quarterly labor force survey. It demonstrates that there's been an uptick in job creation in the past quarter, but the numbers are still not at the level that is required for South Africa to get out of its current chronic unemployment crisis. But of course, the economy is currently sitting in a broadly positive setting altogether. Eskom yesterday or earlier today indicated that even our energy availability factor has now breached the 70% mark. But in turn, what the National Executive Committee is concerned about is the rising cost of electricity there too. We need to balance between availability on the one hand for energy security, but also availability as a function of people and households affording essentially what they need. Related to that is what we need to do with respect to job creation. One of the vulnerabilities we're experiencing on competitiveness for industry is the cost of electricity for our industrial sectors. So one of the discussions that are currently being heard is to finalize the negotiation between government and the Minerals Council and other bodies of industry on finalizing the preferential electricity tariffs that we've been speaking about that we need to channel to especially the smelters, so that we could get back to creating an industrial employment at the back of those smelters. The other important point that is coming up is what the Minister of Finance also spoke very seriously about, improving the capacity of the state to deliver on its projects. We are currently sitting with a near 1 trillion rands allocation for infrastructure projects, but one of the major sore points we have is the capacity of local government, provinces, including national government, to actually finalize project readiness so that the amount budgeted for could be translated into projects that are creating jobs on the ground. The other positive point, of course, is that despite the difficult global trading environment that we're sitting in, especially as a result of the tariffs coming out of the United States, South African export performance has been quite positive. We were all worried about the implications for especially the agricultural sector in light of that, but our citrus exports have actually performed all expectations that we had. So we're doing good on export performance. We're doing good on jobs numbers, not as good as we would want, but there is some positivity there. But we've also noted the positive effect of the gold price on our trade surplus as well, that because the gold price is currently doing really well, South Africa is also registering those dividends quite positively. The last point that I will make is that as far as the MTBPS is concerned, the ANC was interested in seeing whether the structure of the budget that was delivered in May would be retained around about now. And what did we say in May? We said, whatever you are doing in fiscal management, you need to also defend critical social expenditure. And we've seen that even now in the MTPPS, the projections are still remaining at about 61% of the overall budget is dedicated to social expenditure. That includes retaining the SRD grants. That includes defending the increases in the social grants that was announced earlier, defending allocations in education, defending allocations in healthcare, including financing the fight against corruption by improving allocations towards the crime intelligence, the policing and security cluster at large. Those are positive areas that the NEC is looking at. The point that keeps coming up is you need to then think very seriously about how you use the momentum we're sitting on to press hard on this thing of employment creation. And one of the things that keeps coming up is that we need a jobs plan. And the National General Council needs to sit with us as the NEC, having presented to them a draft jobs plan that could be finalized at that level. So those are the broad markers of what we're talking about. We, of course, have seen that we've now been rated, we've been upgraded by the credit rating agencies for the first time in about 20 years. So at a macro level, positive momentum is playing out, but the test is on whether we can translate that momentum into a dividend that all South Africans can see. Transnet is performing pretty well, but it's not where we want it to be. PRASA, the volumes of people that are being transported by trains has gone up significantly, and Sanral, the work that Sanral does, everyone knows, no one can dispute that. So even the pressure that the SOEs have been imposing on our national balance sheet is actually now being alleviated. And I think as SNP was making the point, even on the contingency liability on public finances, the fact that Eskom is performing the way that it is doing, it tells you that no one is fearing the need to put in more money at Eskom. Eskom is now in a position to manage its own finances, but those details will also be pressed on by Comrade David here. Thank you very much, Comrade Spokes.
Is it afternoon? Just to build on what Comrade Zuko has said, there's two things, major things that have happened in the last 2 days. The first one is the upgrade by S&P. And the second one is the announcement on the 3% inflation target. And these two things are important for economic growth, in that the first one by S&P on the upgrade. Because as you all know, that these rating agencies, what they do, they assess your capacity as a sovereign to pay, to service your debt. Because we go out as a sovereign to raise money, and people must have confidence in your ability to lend you money. If they don't, it's either they don't lend you money or they charge you high interest, debt service cost. In this regard, based on our fiscal credibility, S&P has come back and say, you are doing well insofar as managing your fiscus is concerned. And the evidence shows that one of the measures that is used in determining your ability to service your debt is the debt to GDP. And that's a ratio that is used to determine your ability to service your debt, particularly if your economy is not growing at the rate at which it should, to demonstrate that it can service that debt. And in the budget, we've shown that our debt to GDP is stabilizing. They also look at your deficit, your expenditure, vis-a-vis your revenue in the context of a consolidated budget. In May, we said our deficit will be 4.8% of the GDP. It's clear that it's now going to be 4.7, which is lower compared to what we said. So it demonstrates that we are able to manage our public funds in the manner that we are able to pay back the money that we raise in the market. But the third thing that demonstrates that we are managing our money well, public finances well, we've realized the primary budget surplus for 3 years. And what that means is that our revenue is higher than our expenditure on the non-interest expenditure. And for someone who has to invest in buying your bond, they've got confidence that you are in a position to basically service that debt. And this does not only affect the government bonds, but it also affects the economy as a whole. Because if you are a country who has a high debt level, you've got to pay for the price for that. There's a premium, there's a sovereign premium that you pay if the probability, because investors manage risk, and the risk is about the possibility of paying back the money that the investors have put in your bond. And if the probability of your payment of that debt is high, you pay a price. It's like a normal bank. When they lend you money, they assess your capability to pay back that mortgage. If you are not able to, or they think that your capacity to pay, you are not credit worthy, they raise the interest. But if they think that you'll pay back this money, they reduce the interest. And therefore, the cost of capital becomes lower. So similarly, they've made an assessment on our fiscal metrics performance, and it's very clear that we're on the right course, and it is for this reason that we got this upgrade. And the sovereign risk premium is also used for other economic agents, Johannesburg Stock Exchange. So when an investor comes to South Africa with money, they've got to make a choice whether they invest in the bonds or in the JSE. And what they usually, the starting point on what they expect for you as someone who's raising money, they say, we're going to start, if we've got a 10-year bond which pays 8%. They will say, yeah, the South African benchmark bond pays 8%. And therefore, if you want us to invest in the JSE, we'll want 8% plus. So if the sovereign risk premium or the benchmark bond is 6%, it means that they will start from 6%. So these have huge implications for the cost of capital, for the cost of money in the economy as a whole. So this upgrade is a huge achievement. It's a very important outcome of the work that we've been doing, as even before the GNU, by the way, because this work, this primary budget surplus, making sure that we grow our economy, we manage our public finances, did not start when the GNU started. It has been going on for a couple of years. So we're very happy that we've been upgraded to positive outlook by S&P, which demonstrate that we are on course in growing our economy, because it's only when the cost of money is cheaper that it becomes easier for us to raise more money. Firstly, as government, to raise more money, which we invest in building infrastructure, roads, in providing the services that we have, including the social wage which is 60% of our budget. The second thing that has happened, which is quite critical for the cost, for reducing the cost of capital, Zugo was talking about reducing the cost of electricity, which we're also doing well in that regard. But for us to grow the economy, money must be cheaper. Now, the inflation, the 3% inflation target that the minister, working together with the Reserve Bank, has announced, it means that the expectations by different economic actors, households, business, government, it means that their expectations on the inflation will be lower. So what it means is that if the inflation, this is the target, and we must still work towards it. Now, if the inflation is low, because remember, when we met at the African National Congress here in the Lekgotla, the ANC gave a mandate through the NEC that we need low and stable inflation. Basically, making sure that the prices are low and they are also stable, because you don't want the price of bread today is 15 rand, tomorrow it's 100 rand, the other day is 200 rand. You don't want that volatility. You want your prices to be stable. You also want them to be low. And when they are also low, it means that the cost of money will also go down, in the sense that when inflation is low, the central bank is more likely to reduce the interest rates. And when the interest rate, because interest rate is a price that you pay for money. If you go to the bank and they charge you an interest, is a price that you pay for borrowing that money. So if inflation is low, leading to lower interest rates, it means that the households are going to have more money. They won't be spending more money in servicing their debt by paying high interest. And if they've got more money in their hands, it means that they will buy more things in the economy. And as demand increases, as more people have money, they buy more stuff, clothes, businesses grow. Those who want bread, they buy whatever thing that they basically need, and that contributes towards the economy. For businesses that are raising money, either from banks and other sources of institutions that provide money, it means that if inflation is low, the interests are also low, the cost of money, of raising money for you to expand your business activities, it means that it's also low. For us in government who go out in the market and raise money through issuing bonds, it means that if the inflation is low and the interests are lower, our debt service cost, because our debt service cost now is almost 422 billion. That's what we are paying for on the debt, on a gross debt that we have as a sovereign. So, and we've also seen, when the minister was presenting, the numbers show that since the inflation has been lower in the last 12 months, it was hovering around 3%. What that meant is that the interests have gone down, interest rates have gone down, and the debt service costs have gone down. And I think, if I'm correct, we have saved about 4 billion rand as a consequence of inflation going down and the debt service cost going down. So it is important. This is a very, very important development. But also people who are exporting things. Because remember, we are producing things here and selling these things to the rest of the world. And if our prices are lower as a consequence of lower inflation, it means that when we trade, as Zugu was saying, when we trade with the rest of the world, it means that whatever we're selling to the rest of the world will be cheaper, and therefore we can outcompete other people with whom we are competing with in the global market, and thus boosting our industrialization, boosting our export performance, and making sure that we get entry into those markets. Because if our goods and services that we produce here in South Africa are more expensive, the global market will punish us. We won't be able to sell what we produce here in the global market, and that has huge consequences insofar as the viability, the feasibility, and the growth of our companies that are operating here in South Africa, because they may not be able to sell, and thus realizing better returns for them and their shareholders, then they will tend to retrench. So I think these two things are very, very a positive development for South Africa. And these things, like I said, it's work that has been going on even before the government of national unity. Thank you.
I thought you guys were going to clap hands. That was a joke. That was on a lighter note. Thank you very much, Comrade Masondo and Comrade Godlimbi, for those very in-depth analysis and explanations around the state of our economy, the ANC's plans, and the MTBPS. We'll now go to questions. Okay, I've noted 2, 3, 4, 5. Okay, we'll start with you, Putumzwandile, then we'll go to the gentleman and the Springbok, then we'll go to you, then we'll come this side thereafter. Then if you can also just indicate who you're asking the question to as well. Okay, okay, cool.
Good afternoon, colleagues.
Colleagues. It's okay, you can say comrades.
So, just a quick one on the black economic empowerment. It's really been an issue, particularly from your partner in the GNU. So they've been very critical, even going as far as electing the boards to show that BEE, as far as they're concerned, so are destroying the livelihoods of South Africans. What has been the ANC's attitude in that regard? And again, just one more question. Have you reflected on the Palestinian situation? I know that before you were in a meeting, so we did speak to the spokesperson who said that issue was being debated. So have you reflected on it? So what's the position right now? Thanks.
Okay. Yes.
My name is Norman Mosungwen from City Press. Based on your discussion and your analysis, the ratings, the positive ratings that you indicated now, that is globally it's helping the country to look better. And then you look at what now the US president is saying about South Africa. How does that? How do you navigate through that negative outlook versus the positive outlook that the rating agencies are now giving South Africa to say investors can now come to South Africa, while another global player in the US is saying South Africa is not best place to invest because of whatever the misinformation that they have. That's on my first question. The second question would be, in terms of the recent, what Mr. Masudo alluded to, relating to, the interest rates and whatnot, where do you think this comes from? Is it part of the GNU, or is it something that the ANC has been working the ground to achieve? Why was this not achieved back then and now it's coming? Would someone say it's part of the fruit of the GNU, or it's just the ANC that has been working the ground?
No, man. I think Dr. Masondo answered that question, but we'll ask him to repeat it just for emphasis, that this is work that started and it predates the existence of the GNU. But we'll get him to give you a succinct answer to that again. Please proceed.
I'm William from the Citizens. So the question I would like to ask is partly being asked by Dr. Nzwa. But it's last month when you guys had a special meeting on the economic policy and jobs growth. The DHOR statement is saying that the 10-point plan that was proposed by the ANC is similar to what the proposal, slightly different in They had hoped for the government because they proposed an economic inclusion bill that they said was actually to the ANC. So I'd like to know, had you met the DA about the economic inclusion for all bill, and what do you think about that bill? In order to move the this one. Thank you.
Okay.
All right. Thank
Moloto.
Moloto here from ANC. In your last NEC meeting, you promised to grow the economy, I think, by 3% and above. And I mean, we have seen the Minister of Finance saying that for 2025, the projection is that the economy will grow by at least 1.2%. When do you really hope to see that growth that is going beyond 3%? But then I want to come to the issue of the 3% inflation target that was announced also by Minister Potongwana. You did outline the benefits the Deputy Minister thereof, which also the Governor of the Reserve Bank has been talking about. But when can South Africans really get to feel or see these benefits materializing? I want to also come to the jobs plan that you say you are discussing. And I know that you did say you will have a draft that will be presented to the NGC, but South Africans would really want to understand how it would be used. If you can just give us hints in that regard. And my final question relates to the efficiencies, particularly in SOEs. There has been an outcry over the 3.4 billion rand that was allegedly spent by PASA refurbishing the grey and yellow trains, the old trains that we all know. And despite having spent that money, which was part of the 7.5 billion rand budget, despite spending 3.4 billion rand, they are accused of neglecting those refurbished trains to a point that they want to scrap some of them. Surely this doesn't sound right, to a point where the accusation is that this was money that was simply just spent recklessly. How do you intend to plug the hole, particularly on things that appear so obvious in the eyes of the public?
All right. Thank you so much. I think with that, you will be the last one. Thank you.
So in the ANC's NGC document, the issue of inflation targeting has already been mentioned. But it says here the discussion should shift from a narrow focus on inflation targeting to a balanced approach. That is the start. So then, what discussion will there be in December if the decision has already been taken by the Treasury to change the inflation target? And then also, the issue of that seems like increasing that seems like an existential crisis that will reappear in the February budget. Just maybe from UDM, how does then the Treasury plan to avoid the political fighting that we saw in February and March and May? Should Treasury again suggest that that should be increased?
Okay. Thank you so much. We have 12 questions. It's quite a lot. So, okay. So we'll hand over to the chair of ECT, ETC, sorry, and then after that we'll then go to Comrade Masondo. Comrade Zuko.
Thanks, Chair. So let me start off, Putumzwa and Itumeleng. Your questions are related on the BEE question. The DA will claim, for instance, that the turnaround at ESCOM is their doing. You have a responsibility to critically examine whether that is true or not. It's not enough to say the DA claims this and therefore I must be asked to answer that when it's flatly a lie and it's there on the public record. So we know the structural reforms have nothing to do with the Democratic Alliance. They started around 2020, the National Energy Crisis Committee, the Beef for South Africa, but all kinds of things, NECOM. Many things that people have complained about are the ones that have brought us. It has nothing to do with the DA. So if you read the 10-point plan, it essentially accelerates work on those. If you read the 2022 National Conference resolutions of the ANC, which is what the 10-point plan said, we are creating a framework of implementing, it speaks about all those things. what must happen with energy security, what must happen with freight and logistics, what must happen with passenger rail, and so on. None of those things have anything to do with the DA. So what the DA was doing that day was to try ride on the positive momentum coming out of that NEC meeting. I was laughing when they claimed it. I said, okay, the DA has no argument, therefore. They realized that what the ANC is outlining out of that NEC meeting is impeachable. It's unimpeachable. You can't fault it, and therefore what do you do? Opportunistically claim that it has something to do with you. Now, on the BEE thing, I'm convinced that the Democratic Alliance does not know what BEE is. I'm totally convinced. Their own public statements say all that we're arguing is coming from the claims made by Professor William Kumet. Where is the data that Professor William Kumet is relying on to make these points? The DA doesn't care about that. They simply say, he said it and therefore it has to be true. So the entire objection they have towards BEE is based on false information. There's no data that proves anything that they're claiming to that effect. The one Deputy Minister of Small Business released an article writing on the same flawed premise of their argument. They don't understand what they're talking about when they speak about BEE. Absolutely nothing. So I've been very, 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 very uneasy about having to be dragged into this false discussion altogether. It's a red herring, if you ask me. The ANC has not met the DA about whatever they claim is their alternative bill. We've not met them about that. We have no intention of meeting them about that. That's their own thing. It has nothing to do with us. We remain committed to black economic empowerment as an unavoidable part of how to make South Africa work for all of us. If there are efficacy problems with particular instruments of implementing policy, we improve them as we go along, but BEE as a strategic program remains intact. It's not going anywhere. And the National Executive Committee is not going to sit and discuss DA views. That will not happen. And that is not what is happening inside. Norman, what the S&P positive rating reaffirms is that general global public opinion about South Africa is positive. Anyone who decides to isolate themselves from that global consensus is their own doing. It has no effect on how the rest of the world views South Africa. Everyone who's come to South Africa knows that there's no genocide in South Africa. S&P and other rating agencies, they work with data concretely gathered on the ground, not on social media posting. And therefore their opinion is based on the work that they are doing in South Africa. They know that South Africa is on a positive footing.
All right, that is a briefing there that is on the go at the City Council chambers out in Germiston in Ekurhuleni, where the ANC's National Executive Committee is holding its meeting. We've been hearing there in the last while from the members of the Economic Transformation Committee, subcommittee of the ANC's National Executive Committee, chaired by Zuko Godlimpi, who's led that briefing. In the main thrust of the message coming through from that briefing is that there are signs of the economy beginning to get on a firmer footing. We are not out of the woods yet, if I were to sum it up, not out of the woods yet, but there are signs that show that we are starting to be on a firmer footing. So much being said about the fixing of the inflation target at 3%,